Hello guys! Welcome to today's analysis of NIO and ONVO's latest performance in the electric vehicle market. If you've been following these brands, you know that the numbers tell an important story, and we're here to break them down for you. From insurance registrations to marketing strategies, we'll dive deep into what's happening with NIO and ONVO and what it means for their future. So, let's get started. Every Tuesday, Li Auto releases a weekly list of insurance registration figures, providing insight into how different automakers are performing. These numbers give us a real-time glimpse at how NIO is doing week over week. However, this week, NIO was conspicuously absent from the list. That was a shocking realization. So, after digging into the data, it turns out that NIO's main brand registered 1,900 units, while ONVO, its sub-brand, logged 1,100. That adds up to a total of 3,000 insurance registrations last week. Unfortunately, that represents a substantial drop from the previous week's 4,900 registrations. That's a significant decline, so naturally, the big question is, what's happening? What's causing this downward trend? While it's still relatively early in the year, we're only in mid-March, the idea that ONVO alone will reach 20,000 deliveries seems increasingly unrealistic. Every passing week makes it look more and more unlikely. So, what's going wrong? And could there be a silver lining? Sometimes bad news in one area results in optimism elsewhere. Interestingly, NIO's stock is actually up in pre-market trading. Could it be that investors are seeing the government's latest subsidies for NIO as a bullish signal? It's possible that this financial support is boosting confidence in the brand. But let's talk about ONVO specifically. It's clear that the initial hype surrounding ONVO has cooled significantly. It would be inaccurate to say that there's no excitement left, but it has definitely declined not just a little, but by quite a lot. Looking back at the launch timeline, ONVO was first unveiled in May of last year. Fast forward to the present, and only recently has production reached the point where deliveries are ramping up. Even though deliveries technically began in September, that's still a considerable gap from the initial announcement, almost a full year. That's a long time in the automotive industry. Sustaining excitement over such a long period is difficult, especially when new competitors continue to emerge. Consumers now have more choices, including Tesla's updated Model Y and the new Xiaomi YU7, not to mention the various models being released by other brands. When competition is fierce, keeping potential buyers engaged becomes much harder. Another issue is that much of the early demand for ONVO has already been fulfilled. The backlog of pre-orders that initially fueled excitement has now largely been cleared. When reports initially emerged that ONVO had received an influx of orders, it turned out to be around 30,000 units. Today, about 30,000 ONVO vehicles are on the road. At this point, ONVO is operating like any other automaker, selling cars through traditional means rather than relying on a massive backlog of pre-orders. That means marketing is more important than ever. And this brings us back to a crucial point: ONVO's advertising strategy. If you live in China, you've likely seen ONVO ads everywhere inside elevators, on billboards, all over the place. But there's a major issue with these advertisements. While they do emphasize ONVO's connection to NIO, which is great, it's unclear whether that messaging resonates with average consumers. The ads repeatedly mention that ONVO is a sub-brand of NIO and highlight features like the use of NIO's service network, battery swap stations, and its 12 core technologies. But what does that actually mean to someone unfamiliar with NIO? What exactly are these 12 core technologies? If a potential customer walks into an ONVO showroom and asks a salesperson to list these 12 core technologies, will they be able to name them all? Probably not. Maybe they can recall 6 or 7, but the messaging remains vague. Furthermore, even if a sales representative can list all 12, there's no guarantee that a different ONVO dealership would provide the same answer. That lack of clarity creates a disconnect. The average consumer needs simple, digestible information, and vague terms like 12 core technologies don't necessarily translate into a compelling selling point. Another point of confusion is the reference to NIO's service network. If someone isn't already familiar with NIO's reputation for excellent service, then being told ONVO customers will have access to NIO service centers might not hold much meaning. To a layperson, all it really means is that there's a place to get the car repaired just like with any other brand. So, while ONVO's association with NIO is an advantage, the way it's being communicated could be significantly improved. By contrast, look at how BYD advertises its vehicles. Their ads feature clear, concrete accolades, such as the best-selling electric sedan of 2024. These are statements that instantly convey value to the customer. People understand and respond to metrics like sales leadership. ONVO, on the other hand, focuses on abstract terms like core technologies, which fail to make the same impact. What's frustrating is that NIO actually has plenty of real accolades they could leverage in their marketing. For example, the NIO ET7 won Germany's prestigious Golden Steering Wheel Award. That's a big deal, yet you rarely see it mentioned in their ads. Similarly, NIO has received top safety ratings from the European New Car Assessment Program NCAP, yet that information isn't prominently displayed in showrooms or advertisements. It's almost as if NIO is hesitant to boast about its achievements. But why? If you have a product that has been recognized for excellence, you should showcase it. Look at how other brands do it. Take Zeekr, for instance. If you visit a Zeekr store, you'll notice that their 2001 model has a sticker on the back indicating its 5-star NCAP rating. That's a simple yet effective way to communicate quality to potential buyers. NIO has the same 5-star NCAP rating, yet they don't display it anywhere on their vehicles. It's a missed opportunity. There's a broader issue at play here. NIO seems to have a fantastic product, but they're not doing enough to make sure people understand just how good it is. How can you expect to sell a car if you're reluctant to highlight its strengths? The marketing strategy needs a serious overhaul. Ultimately, this lack of clear, impactful messaging is likely contributing to ONVO's struggles. While 20K deliveries for ONVO alone seem out of reach at this point, perhaps NIO and ONVO combined can still hit that target. However, achieving that goal will require a significant shift in how they approach branding and consumer engagement. For now, the outlook appears increasingly uncertain. There's still hope that ONVO can turn things around, but if they want to regain momentum, they need to refine their messaging and emphasize the real-world benefits of their vehicles in a way that resonates with consumers. Time will tell whether they can make the necessary adjustments, but right now, things aren't looking particularly promising. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.